What's up everyone, this is Big Fat Penguin Q and welcome to my channel. Today I will talk about the DYDX exchange and what is the DYDX token and what is the utility of the DYDX token, just whole the thing about the DYDX token. So let's get into it. I'm currently planning to be a full-time YouTuber and I will keep posting crypto-related video at least once a week. If you want to know more about the cryptocurrencies, please subscribe my channel and like this video. I'm sure you will find more gems through my video. So with that being said, today's agenda looks like this. First of all, we will have a look about what is the DYDX exchange and its background. Secondly, we can talk about why people are using DYDX exchange and what is the advantage and disadvantage of it. Finally, I will share my point of view of DYDX token prediction, through some analysis, but by the way, this is the most interesting part, obviously. So without further ado, let's have a look at what is the DYDX exchange. So first of all, DYDX is a decentralized exchange that currently supports perpetual trading, margin trading, and lending and borrowing. DYDX currently runs on smart contract on the Ethereum blockchain and mainly running perpetual contract on layer 2, which offer up to 25 times leverage trading. So this is an example picture of trading perpetual contract on DYDX exchange. To those who don't know what perpetual swap contract is, you just can basically treat it like two players are betting on an underlying assets, like price go up or price go down, without actually buying these assets. So just because this contract don't require really buying any real assets, you can use a very high leverage to bet it go up as long as buying or long position, and go down as long as short position or short selling. This intriguing rule attracts lots of people trading on contract instead of. About the DYDX exchange background, I just want to say DYDX is built back by 2017. From the beginning of DYDX, it received tons of capital from its investors. I do a little bit of research in the venture investing in the crypto area, and the DYDX is, in my opinion, the only project that favored by basically all the crypto top tier investors, including A16Z, 3 Arrow Capital, Paradigm, Polarchain, and Coinbase CEO Brian Armstrong, and so on. And not only DYDX has the most valuable investors as back power, but it also owns a super robust team behind it. The initial founder is Giuliano Antonio, who is a computer science graduate from the Princeton Universities and worked at Coinbase and Uber before he started building DYDX. There are also a lot of people behind the DYDX, and they are mostly the people like come from UCLA, Ivy Leagues, and they have the work experience in Google, Facebook, and Uber, and so on. And so we just can know that obviously this project is built back by the best people in the world, and they are very serious about it. But why DYDX can get such such people in here, gather in here? Why can you such this energy? So right now, you know what DYDX is. It's just like an exchange, just like Coinbase, Binance, FTX, an exchange to trade cryptocurrencies. But the big difference is the Binance and Coinbase, they are centralized exchange, and the DYDX is a decentralized exchange. And this makes huge difference. And I will talk about it more at the next chapter. But we can see the DYDX exchange, their goal is always aiming to be the best and the top leading exchange on the decentralized board. So that's why they can get all the best elites to work for it, to build for it and root. And you can just go to imagine that what if they are going to be successful, and you can just imagine how much Coinbase earned this years. I mean, look at this picture. Once they are going to successful, this thing they are all going to be financial freedom. This is no doubt. So this is why they can all go together because they got incentivized to be the king of the decentralized network. So this is the end of the first introduction. Now I will go to show you about what is the disadvantage and advantage of using DYDX exchange. So let's get into it. Advantage I want to talk about is its decentralizations. The biggest advantage of decentralization is that it enhances the security it offers when compared to the centralized exchange. It gives the user complete control of their assets, and most decentralization do not have a centralized server. They store their data across various servers around the world, and the application and the code you can always, and the and the application and the code is always open source, and you can always verify it on the GitHub. Whereas compared with the centralized exchange, you are depositing your money into the exchange's wallets. And maybe you might not think it is a big deal, but actually, a lot of centralized exchange got hacked when the asset is stolen. If you just go to Google and search crypto exchange get hacked, there's tons of news that will appear there. And another underlying point I want to mention is that when you're depositing your money into the centralized crypto exchange, you are literally helping them to become a shadow bank. You can imagine that when you want to deposit $100 to the Bank of America, HSBC, they will literally just loan all your money to somebody who want to buy a house, but they don't have full of the money, right? They are gonna to pay some interest to the bank, and the bank will loan the money to them. And as an exchange, the bank will give you 0.05% of the interest every year. So when it comes to the cryptocurrency exchange, it is the same, but it is even worse. So first of all, they will do the same thing to loan out your coin to gain some interest. At the same time, they will also to use your asset to give some merging trader to do the merging trading, while not paying you any interest and fee, and you don't even know about it. But this is not the worst. Sometimes they will just literally tell you that you cannot withdraw your coin because of some network update, network error, or some just no reason. They just say they can't withdraw for you. But the fact is they just loan out all of the coin and they don't have the coin in their wallet right now. So this will not only jeopardize every coin holder's liquidity, but also it's a harm to the privacy and transparencies. But when it comes to the decentralized exchange, your coin is recorded in the decentralized contract. You can always check that in the network to verify it, and you can always withdraw it at any time you want. And there's no one can use your asset without your permission at first. So right now you will know about why the decentralization matters, because they will always know some backdoor operation or some malicious exchange will just use your wallet to use your coin to loan to others to gain some interest. But with that being said, I'm not suggesting that when you're using some decentralized application or exchange, they will be more safer than using some centralized exchange. But that's the point, right? You got the option, you got a choice to choose to use the exchange that you want. So that's the whole point, okay? So we can go to the next point. Besides the decentralization, the second advantage I want to talk about is the low gas fee required on the DYDX exchange. To those who don't know what gas fee is, it is just like when you transfer your money to your mount, the bank is always gonna charge you some transaction fee, right? The gas fee is just like the transaction fees, but the gas fee is paid to the miner. And if you are familiar with the Ethereum network, I'm sure that you know that gas fee is so high right now thanks to Ethereum network congestion and some OpenSea NFT platform. And let's imagine this scenario. If you want to buy some coin or do some operation, first you're gonna need to give the permission to the platform to control your coin. Secondly is that you need to confirm the transaction, and if you want to sell it, well, you have to do it again. So they will count to like a 4-time operation, and the gas fee currently is around like $30 or $50 per transaction. So you do the math. One trade and close trade, that's too much for the retail trader, right? But the DYDX exchange used the newest layer 2 technology to ensure there's no massive gas fee involved if you are trading on the DYDX exchange, and the response time is super quick. I don't want to feed you guys lots of the technical ways, but about the layer 2 network, it is just like some technology makes your transaction cheaper and quicker. Therefore, if you are trading on the DYDX exchange, you will not be charged too much because there is only deposit and withdrawal. No other operation is required. So that's a good point for the user to choose to use the DYDX exchange. The third advantage I want to talk about is when you go to use the DYDX exchange, there's no KYC information required. To those who don't know what KYC is, its full name is called Know Your Customer. And the KYC is a process that refers to when you come to financial institution or some exchange, they will gather your identity to verify whether you are a true human being. Therefore, its initial purpose is to prevent some money laundering, some border trading, or some illegal activities. But when it goes to cryptocurrency exchange, things got unchanged. So the first thing when you come to a crypto centralized exchange, the first thing they want you to do is to submit your personal information to them, and they will verify you. And when you fail to do this, well, the function in the platform is limited. Basically, you cannot do the contract trading, you cannot do the margin trading, and the withdrawal limit is like 3K per day. But when you compare to the DYDX exchange, they do not require to do any know your customer verification. So therefore, your personal information is secured, and at the same time, they also provide you the highest degree of the freedom because you can withdraw and deposit as much as you want. And another underlying fact that I want to talk about is the KYC. It is not like what they say that kind of easy. All they say is like, you give your personal information. We are going to help you like verify you are not a bot, you are not a, some money launderer, you are not a bad actors. But what if they are the bad at the first place? I'm sure that everyone have you at least received some spam calls, spam messages you come from nowhere. But have you ever imagined that where the information comes from? That's the one of the screenshot from a Telegram group. The one is selling the KYC information comes from Binance users. And have you ever imagined that who is the one that can always get this kind of information? The address, the name, the passport number, your telephone number? Who is the one that can do this? This is the comes from the news. They are stating that the dark web sellers are selling the KYC information for 0.3 bucks per person. Have you ever imagined who do this, right? Who can get this kind of information? I mean, honestly, I don't know who sell this data, but we can do the math, right? If $0.3 per user identity, what if the hacker or even if just the exchange insider in the platform sold 1 million package of data to the dark web market or to the bad guys, right? There will be 300,000. And what if they just sell it for 10 bad guys? There will be $3 million. Just easy, simple copy some data, identity, and just send. Wow, that's easy money, right? You do it maybe once or twice. You don't need to worry about the future. And this is too tempting for the hackers or even just the exchange insider. And that's not even the worst. And even if it is like a real exchange insider are selling this KYC information, the exchange itself, they cannot claim that's their failure. Because you can just imagine this, simple scenario. Once the exchange are going to say like, oh, this is their fault, this is, insider are selling this KYC information, then the user will just start to doubting like, what? My information is leaked and you're saying this is your fault? Well, no, then I'm not going to use your exchange anymore because my information is not secure. My information is not protected, right? Then they are going to, to have a declining of the user number. Then the exchange itself will not be living anymore because every user to an exchange is just like oxygen to everyone. And once they are, lose the users, they are not going to charge the users trading fee, transaction fee anymore. And they are not going to be profitable anymore, right? So the best action they can do at the first place is to kill the news and keep the things down. And this is just comes to the point like why decentralization matters, why no KYC providing matters. Because when you're not going to submit me any kind of a KYC information, well, no one can leak your information, right? Your information is safe, is secure by yourself, and no one can do anything to you. So this is just proof a point that you can never ever to easily to give out your information, give out your privacy. And I'm not saying that not doing KYC is for the best and my deduction is absolutely right. But you can just start to realizing that why more and more people are going to use this kind of decentralized application and exchange. Because those things gives people a choice to trade no matter who they are, no matter where they come from. There's always no limitation and restriction. And this choice matters because this is what freedom and privacy and the transparency looks like without the choice. And this is, the most important thing in the crypto world, in my opinions. Okay, that's a little bit of off topic right now, but I'm sure you can start to realize that why people are using these kind of things. Just let's go into the next topic, the DYDX price analysis and prediction. So before we start, I just want to say that I'm always like the guy, if I don't understand what the concept is, what is this coin, who issued this coin, what's the background of this coin, what can we do about this coin, then I'm not gonna invest in it. Because the price will fluctuate a lot, especially for the alternative coin in cryptocurrency. So even when the things go south, the only way that can help you to be the holder and take profit from it is really understand what the coin is and take beliefs on it. Otherwise, just a little bit of the deal can just make you buy high and sell low, and that's a lose money strategy. So don't fall into it. So without further ado, let's have a look at the tokenomic first. Then it's go to the price chart. Then finally is my prediction and my strategy about the DYDX token. Let's get into it. So this is just the introduction from the DYDX team, and in fact there are a lot of stuff to read, but I'm just gonna grasp the most important points out for you guys so we can save lots of time. The first utility I want to talk about is the fee reduction. We can look at the left part of the picture. If you hold some DYDX balance in your wallet or in your staking point, which I'll mention later, then you will just automatically have some discount on your trading, which is quite nice if you are a day trader. Having 100 token is 3% discount and 1000 token is 5%. And I assume this is the normal trader will have because along with the tiers goes up, it requires you holding more token to gain the discount for your trading. If we look at the tier 3, which require your 5k DYDX token, then with the current price of $22, there will be 110,000, and that's a lot for the people, right? I assume retail trader won't keep the token just for these discounts because obviously it is not worth it. We can just do the easy math right here. Let's just say you are going to trade $1 million deals, which is quite amount. And half is maker order, another half is a taker order. They will result at $750 fees. And if you are going to save the $70 for it, if you're just holding 110,000 on your wallet, that's not a good trade-off, right? If anyone can have 110,000, I'm sure they can use this money to generate more money in other ways and without the DYDX token price fluctuation, which is safer and wiser. But if we look at another perspective, this might be the good for the quant trader and market trader and institutional trader because they are trading with their bots every day with a big amount. Holding the token potentially save them lots of monies. So holding token for this utility is the things that the long-term trader will do in a very limited time. It won't make a big difference for the retail trader. So retail trader is not gonna buy this coin for this utility, institutional will buy this. The next utility I want to talk about is the DYDX staking pool. The DYDX staking pool is just like you use your DYDX token stake at the website and they will automatically distribute more DYDX token if you lock in the token in the pool. You will proportionally distribute to everyone stake in that pool. So that's just like an incentivize to the loyal holder. By their tokenomics, it will distribute 0.5% of the total token per year to the staking pool and will last for 5 years. This staking pool is just like a dividend to a stock share, but the difference is the stock share is highly liquid, but the token you're staking in the staking pool will require at least a 14 days lockout if you want to withdraw it. So from what I have seen, I think this is a good point for the long-term token holders because it will generate some yield if you just stake in the pool. But I'm sure it will not mean a lot unless you really want to stake it for a very long time. Because you can just simply think about that. They set a withdrawal restriction for 14 days, which is super illiquid. If you want in, well, that's easy. But if you want out, then that's hard. So this is more like a fixed time deposit account. So if you are really, the short-term trader or retail trader, you probably won't stake in. The second thing I want to talk about is their statement is saying that there might be a shortfall event, which you might use your token as an insurance if the bad thing happens. The shortfall event can be concluded as the exchange solvencies or some smart contract attacks or any other event that DYDX exchange deemed as a shortfall event. But basically, even if those things they really happen, I don't think the DYDX exchange will really use the user's assets as insurance compensations because they earn a lot of the money right now, which I will talk about it later. And besides, this will really look bad for them. If they are going to do this once time, they are not going to, there will not be more users to stake their money in their pool. So basically, I don't think this kinds of thing will really happen. Another analysis I want to talk about is the staking pool will unavailably attract the token holder to stake their coin in the staking pool. Because that's basically the only way the DYDX token can generate the money to the token holders. Every holder will just you want to do that, right? Who do want to earn some extra bucks, right? But remember, I say they will distribute the token proportionally on the staking pool. So again, if you are the big bags token holders, or you have you really stake it on the long time, then this is a zero sum game. The more people are participating, the less you will get. So once again, this is good news for the long-term holders as they don't require the liquidity, don't need to cash out, and good for the institutional token holder because they have a big bulk of the token right there, so they can get a reward more than the retail traders. The final utility of the DYDX token is about its voting rights. So DYDX is a decentralized community, which means that everybody will have a say if you are a token holder. They will have a lot of discussion in the DYDX communities, and they might change some things in the futures. This looks very good, very democratic, but this is a lot of platforms are doing this right now. So I don't think this kind of voting right will make a big difference on the price fluctuations. So I'm not going to talking about it too much. That's the end of the utility of the DYDX token. I'm not going to to give them my price prediction and strategy. So right now, as we can see, the DYDX is ranked at 79 at the coin market cap with a price of 23.8 bucks. I'm not a chart guy, but I did keep an eye on the DYDX token through several market small dumping. And I have to say that DYDX token is really performing well, even under the Bitcoin crashing. It basically did not fall down more than 12%, while other alternative coin is surrendering almost 20 or even 30%. And it recovered really fast, even have a nice growth while other coins are dumped. Before the Evergrande thing, it even breaks through its previous high around at 18. So we can assume that the DYDX do get its audience attention to buy the dip and have the momentum to go even higher, which makes it a really good point to invest. And that's for the charts. Another point I want to say is about its market share in the decentralized exchange. When comparing to other decentralized exchange, it usually rank at first place or second place, and even at some point really outperform Uniswap a lot. Even though Uniswap have around 900 trading pairs, whereas the DYDX only have 25 trading pairs. So the point is, the DYDX is the leading decentralized exchange, and it is not hard to think about that it will continuously outperform Uniswap's trading volumes because DYDX can still list a huge amount of the trading pairs to its markets. Then when they list more trading pairs, which means the volume will only go up. And another point is in the centralized exchange, the derivative trading volume is always 4 times or even 5 times than the real spot trading. But compare it at a decentralized exchange, the ratio for spot trading compared to derivative trading is 1.4. So which results that we can expect its trading volume will surge in the long term for even 16 times. Before we move to next topic, I just want to say thank you for you guys staying to here. If you like and enjoy my video, please click the subscribe below. Like this video, I will do feel encouraged. And the next topic I want to talk about is the profitability of the DYDX exchange, which I think is the most important metrics for measuring a business. So just let's get into it. We all know the more trading volume an exchange have, the more fee it can charge from the users. But today, its weekly volume is around 7 million per week, which is astonished quite a lot, and which also have a tendency to increase in the future. And the unique users of DYDX still stably increase by the times. By the way, I do the comparison to other derivative decentralized exchange, and for which I have to say that DYDX is still outperforming them quite a lot. They are not even close in terms of profitability if you just look at the statistics. So DYDX is definitely the king of derivative and the print money every day like a gangsters right now. Okay, that's for the good point. Now I'm going to share some potential problems to the DYDX token price. The first of all, DYDX token now have roughly 5% of the inflation rate per month due to its liquidity mining program and staking program. I'm not sure whether the market can endure if the people start dumping it. Another point I want to mention is I think we are currently in an ambiguous market. Right now we are going to pump in the next seconds and we are going to dump in the next seconds. So maybe by the statistics, the DYDX is really looking good right now, but I'm not sure how it will perform if we turn into a bear market, which might cause a very big down to the market, because in the bear market the people will always tend to turn their alternative coin to the Bitcoin or just simply cash outs. So with the all analysis, I think the DYDX is still a very good project and can really eat a lot of market shares in the future. But I would say it need more time to shine its true potential later. I would say it at least was at the 40th place or even 30th place at this bull round. I believe that if we continue to in this bull run, I think it can eventually hit 35 or even 14th. In the long run, let's say just 3 to 5 years, I think it will eventually break 150 or even 200 in some days. As a retail trader, I am more tending to hold it for a long time. I'm currently holding some coin in my bags at a range price of $12. I will separately sell it at a target price of 30 to 40. And if the token price drop back to $8 or even $10, I will continuously buy in bags. Okay, thank you for watching my videos today. If you feel enjoying my videos, please give a subscribe and like below. I'll keep making more crypto related video, and thank you for watching it. I will see you soon.